If you're new to credit or trying to rebuild after a rough patch, you already know how hard it is. Getting denied for apartments, stuck with high interest rates, or just even being told no over and over again gets old fast. But imagine this instead. You apply for that apartment and you actually get approved. You qualify for a credit card with rewards, and you walk into a dealership and don't get hit with a crazy 20% interest rate. That's what building better credit can do. And Self is one of the easiest tools to get you there. They've helped users boost their scores by an average of 47 points. And in this video, I'll break down the Credit Builder Loan, Secure Card, and the brand new rent and bill reporting tool so you can decide whether or not it is still worth it in 2025. So first off, let's go over what is Self. Self is a fintech company that's based in Austin, Texas. They've been around since 2015, and they're best known for helping people build or rebuild credit without needing a good score to start. Most of their products report to all three of the major credit bureaus, including Equifax, Experian, and TransUnion, and everything that they offer is designed to help you build positive payment history, credit mix, and credit age, all without traditional loans or a credit card. So as of 2025, Self has three core products. They have a credit builder loan, a secure credit card, and a rent and bill trade line. So let's break down each one. The first one is the credit builder loan. This is the OG product that they're known for. And here's how it works and why it is a little bit different from a regular loan. First off is that you don't get the money up front. Instead, you choose a small monthly payment, anywhere between $25 to $150 a month, and that money goes into a locked savings account. That amount is held onto a certificate deposit or a CD at one of their banking partners, and all of their banks are FDIC insured. You pay that amount each month for 24 months, and at the end, you get that money back minus the interest. So pick whatever payment amount feels comfortable to you, because from a credit building standpoint, it doesn't matter whether you choose $25 or $150. What really matters is that you're paying on time and reducing your balance. That is what helps your credit score. Now, let's go a little bit more high level. Having a larger loan amount reported to the credit profile may help you qualify for larger loans in the future. Lenders like to see that you've been able to manage higher amounts responsibly. Now, another thing to keep in mind is that whatever plan that you choose, it will factor into your debt to income ratio. For example, a $25 a month plan shows $600 in debt. A $150 plan shows as $3,600 in debt. So choose based on what works best for your overall credit and budget goals. The main reason to get a credit builder loan is to get positive information reported to the credit bureaus. Each on-time payment gets reported to all three credit bureaus, just like a loan would, even though you're really just saving your own money. This builds payment history, which is the biggest factor in your credit score. And because it is an installment account, it adds credit mix to your profile if you only have revolving accounts like a credit card. There's also no credit check, no hard pulls, and no income requirements. You just need a bank account and some basic personal info to get started. So here's what I like about it. It is simple, you're not borrowing your own money, and it builds credit and savings at the same time. But one heads up is that if you do miss a payment, it will still get reported, so I always recommend setting up autopay. Now, to thicken up your credit profile even further, they have a secure credit card. This is Self's second major product, and a lot of people don't even know it exists. So you can unlock this card after making just 3 on-time payments on your credit builder loan, saving at least $100 and meeting income requirements. But if you don't have the credit builder loan, you can just get this card as a standalone product. You secure your card by linking your bank account or debit card. How much that you decide to put down as a secure deposit will be your credit limit. At minimum, it has to be at least $100. So this means that there's no hard credit check, no big deposit upfront like some banks, and reports to all three bureaus. Once you get approved for it, then you can just use it like a regular credit card. You can buy gas, groceries, whatever you need, and then you can just pay it off monthly to build revolving credit and show responsible usage. So here's why this is important. Revolving accounts like this are critical for improving your credit utilization, building a long-term history with a credit card issuer, and showing lenders that you can handle different types of credit. Now, there are plenty of secure cards on the market, and you can probably just get one from your bank. But if you are already in the Self ecosystem with the loan, then it may make it easier just letting them secure the card using the savings that you already build with that loan. It's 2 birds with 1 stone, and both birds report to your credit profile. One thing that you must know about this secure card is that there is 0 intro annual fee for the first year. Then the following year, it'll be $25. This is something that I personally don't like, since there are many secure cards out there that don't have an annual fee and also allows you to earn rewards. Now, the most recent and possibly most underrated product Self offers is the rent and bills reporting. If you're already paying rent, utilities, or your cell phone bill every single month, why not get credit for it? Self now offers 2 versions of their rent and bills reporting service. They have a free version and a premium version that gives you even more reporting power for just $6.95 a month. So here's the difference. So with the free plan, Self will report your rent payments to all 3 of the major credit bureaus. There's no cost, no need for other Self products, and there's no credit check. It's a solid way to add a trade line and build credit history just for paying rent. If you're just renting, then this is probably the easiest credit building move that you can make, and it is totally free. With the premium plan, you get everything in the free plan, plus reporting of your cell phone bill and utilities such as water, electric, gas, internet, etc. These bill payments are reported to TransUnion, and you also get credit monitoring. There's also no contracts, so you can cancel at any time. If you're paying those bills every month anyways, then this turns into positive credit history, which is the smart move for building your credit score. Whether you're on the free or the premium plan, you can also use something called Lookback. Lookback is a one-time feature that allows you to report up to 24 months of past rent and bill payments, even though you just sign up today. It costs a one-time fee of $49.95, and you'll never be charged again, even if you upgrade or change your subscription type later on. This is one of the easiest ways to instantly add seasoned trade lines to your credit report. If you've been paying rent and bills for years, then this can give your score a nice little jump. To get started with either version, you need to verify your account using a secure tool called Plaid. This is how they see and confirm your payment history. For rent payments, you can either use a verified bank account or another accepted method. Once verified, you're able to choose which payments that you want Self to report. And from there, they will handle the rest by adding new positive trade lines to your credit profile each month. It's not just a one-time report. Ongoing payments continue to help your score month after month as long as you keep paying on time. So this option is especially great if you're new to credit, you don't want to open a loan or a card, or just want to maximize the credit value of your bills that you're already paying. Now let's talk about the application process with Self. So signing up for Self is quick and easy. You can apply directly from their website or download the Self app from the App Store or Google Play. So to open an account, you need a valid email address and phone number, your social security number, and a linked bank account or debit card to fund your loan or savings. Again, there's no hard pull for any of their products, so there's no worries there. So once you're in, you just choose a plan, and if you're going with the Credit Builder account, your payments will start the following month. Now let's talk about who is Self for and who's it not for. Self is a great option for people with no credit or bad credit, those who are looking to rebuild the credit, renters who want credit that they're already paying for, and anyone who's looking to add multiple trade lines to their report without debt. It's especially useful if you want a safe way to build credit, you don't want a hard inquiry, and you like the idea of saving money while building credit. In my opinion, the people who will benefit most from Self are those who are new to credit entirely. When you are starting with a clean slate, there's more opportunity to grow. You're building your score and profile from the ground up, and tools like Self can help you do that faster. Since Self offers multiple types of trade lines like installment loans, revolving credit, rent, and utility reporting, it gives your profile a quick boost from Credit Mix. Now, if this is you, you may not get as much benefit from Self's product. If you already have multiple credit cards and loans, especially if they're in good standing, adding another trade line may not make a big impact. Next is if you're dealing with high credit card debt. Your utilization ratio could be pulling your score down way farther than a new trade line can help. And if you have recent derogatory marks like late payments, collections, or charge-offs within the past 1 to 2 years, those negative items can weigh heavily on your score regardless of what you add. The truth is, new positive accounts help, but they won't fully offset major negatives unless those issues are addressed. If that's your situation, I recommend working on removing or resolving those negatives first. As a shameless plug, if you're in that spot, I actually do have a tool that can help. It's called Credit Rehab Pro, a DIY software that helps you fix your credit step by step. You find the link down in the description, or you can scan the QR code right here. Now here are a few more things that you must know about Self. Even though none of Self's tools involve a hard inquiry, you might still notice a temporary dip on your credit score after signing up. So this can happen because of 2 reasons. One is that you're adding a brand new account, which lowers your average credit age. And 2 is that if you start with a credit builder loan, this adds to your total reported debt. But the thing is that don't stress, that small dip is usually short-lived, and as long as you make consistent on-time payments and your balances get smaller, your score should start trending upward. If you're ready to give Self a try, whether it is the credit builder loan, the secure card, or even just the free rent reporting, I've got a link down in the description, or you could just scan this QR code. It is an affiliate link, so if you sign up through it, it helps support the channel at no cost to you, but absolutely no pressure. I just think that Self is one of the easiest ways to start building credit, especially if you're starting from scratch or rebuilding. I'll see you in the next one.